Well, in Nigeria, we had ASO Savings and Loans, a mortgage institution, say this week that it experienced a huge decline in profit before and after tax PAT, falling back close on 55% for the third quarter, ended December the 31st. To run us through the numbers now and strategy being employed by the company moving forward, Hassan Usman, CEO of ASO Savings and Loans, joins us now live from our studios in Lagos, Nigeria. Thanks so much for your time this afternoon, Hassan. Well, on Wednesday, the company out with third quarter numbers and looking pretty dismal. Run us through some of your major pressure points at the moment.
Certainly. Thank you very much. We put out our numbers to the exchange early in the week, and they showed a 55% drop on the year-on-year numbers compared to last year. Essentially, what we're seeing a couple of factors. First of all, we have seen the slowdown in the Nigerian economy over the last year or so. That has affected us. Lending rates have gone up higher. We've seen rising defaults amongst our customers, and that has clearly had some impact on significant impact upon our operations. Secondly, and allied to that, we had started off the year last year anticipating expansion in certain areas. And we'd gone ahead prior to that in opening up new branches in about almost 10 different locations across the country. Now, that was an anticipation of growth coming in. With a slowdown in the economy, with the credit becoming relatively difficult, with interest rates getting higher, it became difficult to ramp up the benefits we anticipated from those branches. So we had the added factor of increased operational expenses because of branches that have been opened that are yet to turn around to be profitable. So those twin factors, essentially, the higher interest rate with the rise in defaults by customers, coupled with the expansion where we have branches that have opened that are yet to turn profitable, have had a double whammy on our operations. Now, going forward, we don't expect that to continue indefinitely. We're pretty confident the branches we've opened will turn around over the course of this year. We've opened in key locations. Lagos is one of our prime areas. We've opened a branch in Lagos. We hope to open a couple more in Lagos. Lagos, we think, will be as big, if not bigger, than what we have in Abuja. As you know, right now, most of our operations are based in Abuja, and we think we can do about 50% of what we're doing in Abuja in Lagos over the course of the next 18 months. So that will significantly impact upon our performance going forward. Secondly, as well, we've opened up in Kano, we opened up in Port Harcourt. All these are key areas where there's huge demand for housing. There's a huge housing deficit in the country, but particularly in the urban areas. So we believe the impact of Port Harcourt, Lagos, and Kano will have a positive effect on our performance in the current year. Now, coupled with that, we also anticipate going to the market at some point, once the market stabilizes, to do two things. One is to raise a convertible instrument, side by side with doing a mortgage bond and securitization. And we think those two things will give us a much deeper market, a much wider market, enable us to afford a longer tenor for our products and to reach out to vast numbers of customers.
So that's some of the plans in the pipeline. Of course, the challenges that you face as you venture forth with all of this are shared by other financiers within the Nigerian market as well. And that comes to provision for loan losses. I mean, immediately after we saw the banks experience some of their, losses, we saw many asking whether mortgage financiers, when they release their results, will show evidence of the same. Apparently so. I mean, the company reporting a provision of 235.36 million naira within the period, but that is still not as bad as the number we saw in the previous reporting period, where you set aside 475.6 million naira. So just how concerned should we be with your status in that regard, and what kind of risk mitigating strategies are you employing?
Right. Well, I don't think it's a cause for concern at the moment. I think we have done a fairly good job in instituting an enterprise risk management framework. Over the last year or so, we have worked with our advisors. We put up a very strong mechanism in place. We have a lot more transactions that have to go through credit scoring. Of course, the central bank is also insisting on all new loans going through credit bureaus, so you have to have credit reports for new customers. So we believe we have a fairly strong risk management framework in place, which will see us through the years ahead. Now, with regards to the provisions, yes, it's not as large as what we had in the year just past, but it reflects the general downturn in the Nigerian economy. We have seen a lot of stress over the last year with higher interest rates, with longer default and so on. What we're doing going forward We are focusing a lot more on smaller mortgages, focusing on the mid-market, the mid-tier market, and the lower market. So we're not doing anything at all in the upper segments of the income strata. We did a bit of that in the previous years, and we've been hurt quite badly by that. So we're focusing really going forward on the mid-tier market, on the low-income segments of the population.
Of course, competition is high. I mean, we saw your rival Resort Savings and Loans submitting its unaudited results for the 9 months of the last financial year ending September the 30th, and those are looking a little bit better than yours did. Of course, that company spoke of plans to source foreign loans for the purpose of actually executing the construction of estates in prime areas of the country. What are some of the innovative strategies you've come up with to tackle what is a very competitive environment right now?
Certainly. One of the big issues we have is the shortage of mortgageable homes across the country. So like our competitors, we're also working with developers who we're looking at as an end-to-end strategy, essentially identifying developers that have a good track record, quality development, funding them through the construction of houses, and then helping them market the houses to find the buyers and providing the mortgages for the buyers to acquire the houses. So we see it as an end-to-end strategy. We believe that will add a lot of value to all of us, to ourselves as a company, to our customers as a whole. We see that adding significant income streams, fee income, come into the company. So over and beyond just the normal income streams coming from rental, from interest income, I beg your pardon, we see fees and commissions, which come with working closely with developers, with helping them market their houses and find buyers, providing an additional income stream. So we're pretty confident that the numbers that we have will improve over the course of this year.
What's your earnings outlook for the course of this year, Hassan?
We expect to double what we did in the year just ended, in the year ended 2009. So we're very confident we can achieve that. Of course, it depends on a couple of things as well. We would need to raise additional capital to make it happen. We're on course with arrangements for that. We believe by June, July or thereabouts, we should be in a position to raise additional capital. And once we do that, we think doubling what we did last year will not be a problem.